Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, April 30th, 2013. Well, a continuation of the trend to the upside today. A candle that's made a higher high and a higher low. Previous day's trading we had establishment of the first time frame uptrend again following a 1 day downtrend with a candle that made a lower high and a lower low. That candle found support down around the 1576 level, set the market up for that potential change of trend with this small bodied candle and a small black body where the sellers failed to take control. The following day the buyers took very strong control of the market and found some decent upside momentum to change the trend, testing up to around the 1600 round number. And today we've seen some follow through with the market trading up above the high of the previous day's trading and closing up above their closing, in fact at the high for today's trading. And that suggests that the buyers have closed with control of this market and they've shown some strong commitment. The largest shadow on the bottom of the candle represents the sellers losing commitment as they tested down below this 1590 level, an area where the market was previously rejected from to the downside. So the buyers lost commitment previously and the sellers have lost commitment around the same area now. So it says something about the strength of the buyers. The only problem for the bulls here is that we have a small white body candle and very much smaller than the previous day's trading, and that suggests that in net terms the buyers have lost some momentum. They've made only a fairly small amount of net bullish progress between the open and the close, in contrast to the previous day's trading where they made a substantial amount. Now that obviously is the influence of the 1600 round number level of resistance and trading at these all-time highs. So the market is not doing it easy up around these levels, but if we do see strong bullish trading up above 1600, we could see this market trade substantially higher. Now in terms of candlesticks, this is a potential candlestick reversal pattern. It's a hanging man reversal pattern, and there is a possibility of a change of trend to the downside, so let's be aware of that potential. And all of these patterns do require confirmation. So confirmation would be a candle with a lower high and a lower low, and it makes the low of this current candle at 1586 very, very important. I suggest that even though there is a possibility of that happening, the way that this market is trading, with the buyers maintaining control of this market, does suggest that there is a good possibility of the market trading higher and above the 1600 level. But we can't preempt the market. We need to be reactive, so we'll be reactive to a bullish break above the 1600 and also reactive to a test down below the low, and perhaps then potential test down to 1576, which was previous resistance and now is acting as support and has potential to act as strong support. Now in terms of the Fibonacci extension, and we're examining the relationship of the first time frame uptrend to the previous time the market's trending up, and here we've seen the market trade above the 23.6% level, and now we're testing to the 38.2% level. The market hasn't quite tested to there. That's at 1599, coinciding with that round number 1600. Has potential to be strong resistance. If we do see sellers come in and the control and commitment swing back to the sellers, then that will set the market up for a potential change of trend. But let's watch how the market reacts around that level. Beyond that level we have the 50% level at 1605. In terms of the Fibonacci retracement, for the previous day's trading we saw the buyers close very strongly above the 100% level, and today the buyers have closed with control again. This suggests that the market may test to the 161.8% level, 1601, round number 1600 in a zone. Very, very strong resistance, and let's watch the market if it does trade up to that level. Beyond that we do have the 261.8% around 1617. Now in terms of Ichimoku, obviously a bullish market in all three time frames. The market is trading above the cloud, so we have a bullish market in the long term time frame and trading above the Kijun-sen and the Tenkan-sen, the pink line and the green line, so bullish in the medium and fast term time frames. One slight worry here is the Kijun-sen, the pink line, is pointing flat, so we do need to be aware of that. Price action has a strong probability of being attracted back towards a flat Kijun-sen, so let's look for that. So that makes the low of the current candle even more important. But really, as I've already mentioned, we have a market where the buyers are pretty much strongly in control. bullish in all three time frames with Ichimoku. Look at the colours of these candles in this whole 2-week process here. We've only had one black candle. It was a very small black-bodied candle. The buyers have very strong control of this market. A small worry with a loss of momentum in net terms. We need to look to the low of the current candle and be reactive to that, but also be reactive to the round number 1600 resistance.